Good evening, everyone. I think my screen is visible for you from the net. I have also taken certain figures for the cash flow statement and our analysis of the companies. Ignoring the names of the companies, if you could please go through the figures. Take your time. I am not in a hurry. I'm still waiting for people to join in. Take 15-20 minutes, study the figures, tell me according to you, ignoring the name and the brand value of the company, which company do you think is good for your investment? So this class, I will be quiet. I want you to tell me your analysis. Please do write it down so that it helps me understand whether you have got the hang of CFS and the ratios, but ratios are not given in this uh, uh, PPT. Please don't be in a hurry. Study each one properly. See which one is positive, which one is negative. Rate the companies. Give your analysis why you have done so. What do you think of each company? For those of you who have just joined, you on your screen you will be able to see figures of cash from operating activity, investing activity, financing activity for the different companies. I am not speaking much. I am giving you time according to your understanding. Please analyze these companies. Tell me according to you the rating of the companies in the sense without seeing its name. So just tell me if number one is Avanti Feed or number one is Z, like that. Rate it 1 to 5 and give me the reason also for your analysis. I'm giving you 10-15 minutes. I'm not in a hurry. Today's session is dedicated to your analysis. Good evening. Good evening, Vanashriji. Vanashri ji, I did not put up any question. The slide that is there in on your screen, I have taken out these figures. I want you to analyze on your own based on what we have discussed in the last two sessions, seeing the cash from operating activity, investing, financing activity. According to you, which company is good for investment and which company is not so good for the investment? So if these figures are in front of you and I ask you to invest in say first three companies, according to you, what will be the rating and why so? Hmm. Anuji, I got your answer. Please do tell me your analysis also. Why so? Why do you think this should be the rating? And let me get the ratings from everyone else. And then we will analyze each company. Please take your time, everyone. You have 10 more minutes to do so. I've got two answers. I'm still waiting for more answers according to you. Seeing the figures, which out of these companies would you rate one, two, three? Please do attempt to answer so that you will be able to do so for yourself later on. Right now, I'm there to analyze with you. Yes, I'm very much there, but I am giving you time to analyze it yourself. Vishalji, I will speak about these companies in 5 more minutes, but I want you to analyze on your own first. So that is why I have picked up these figures so that you can analyze for yourself. Three more minutes for you to please send your answers. I've got a few answers. All right, I've got a few answers. Let me break it down for you. Now, when we had done cash from operating activity, number one rule that I had told you is if cash from operating activity is negative, we will try and find out, has this company been in negative from the last many years? If yes, please ignore that company. Please try to avoid investing in that company. So under these 5 companies, Avanti Feed, that has a negative cash from operating activity, which tells me that I am spending more money in my operations than I am getting. So it is not wise to invest in that company, because every time I will have to pay from my pockets. So if you see Avanti Feed, it is having a negative cash from operating activity of 212 lakh or 1,000 rupees. Actually, it is lakh. But so that means every year this company is spending more, and therefore it will have to invest this much more to pay off its expenses. It does not have the income, but it will have to pay off the expenses. So where does it get the money from? If you check, cash from investing activity is positive. So what is the company doing? For Avanti Feed I'm talking about. What is the company doing? The company is selling off its assets. So maybe it's selling off its machinery, maybe it's selling off the other assets, but it's selling it off and then it is compensating on, say, paying off the operating expenses. But how long can a company do that? Its assets will eventually expire. So how long will the company be able to bear this? So that means Avanti Feed is not doing the right thing. It is having excess expenses, and to pay off this excess expenses, it is selling off its assets. So instead of expansion or something, it is in fact contracting its operations, because if it sells its assets, sooner or later it will have to limit its operations. So the excess money that is left, we can say it is paying off its maybe the loan, or it is also possible that it has taken enough loan and it is paying off its interest expenses. So come what may, Avanti Feed in all the three fields is not that good. I will wait. That's right. Avanti Feed is selling its assets. Why? Because it is having a positive cash from investing activity. So Avanti Feed is definitely not looking at expansion. And the second concerning thing is, in fact, the first concerning thing is that its cash from operating activity is negative. That means it is giving off more expenses than the amount of money it is generating from its business activity. Any problem with the analysis of Avanti Feed? So according to me, Avanti Feed is definitely a no investment. Okay. So I would give fifth number to Avanti Feed. Let's move on to Z. Z is a big brand name. If you see here, cash from operating activity is positive, which is good for us. We should move ahead and see whether we can invest in Z. But if you come to the second parameter, cash from investing activity is also positive. So if you check, Z is selling off its assets, and quite a few assets, because the figure is large. And after selling off its assets, maybe it is repaying the loan, because cash from financing activity is negative. So the moment a company is selling off its asset and repaying its loan, it does not give us a positive feed of the company, even though its cash from operating activity is positive. So that is why I had taken these two different companies for you, so that we could analyze it together. So although its cash from operating activity is positive, yet I don't see this company as a very good company, because it is selling off its assets. If it sells off its asset, means it is limiting its operations. And maybe from that money only it is repaying the loan. Repayment of loan is good, but that repayment should be out of its money that it is making out of its business. But here, what is it doing? It is selling off the asset and then repaying, which tells us that Z is limiting its operations. So Z wants to be a smaller company now. So if its assets are sold next year, definitely its operations would be less, and its cash from operating activity will also be less. So as per me, I would give Z number 4. I'm waiting. If there is anything that you think differently, please let me know. So Avanti Feed number 5, Z number 4. Now, between Ambika Cotton and Aptus, if you check, cash from operating activity is positive for both. Cash from investing activity is negative for both. Cash from financing activity is also negative for both. So if I ask you, out of these two, which one would you think is good? Why, Anuji? Why is no, not TCS, Parshuramji? I'm asking out of Ambika and Aptus. Why? Why is Ambika Cotton better according to you? Just because it has a higher cash from operating activity, or any other reason? Okay, right. Now, just seeing these figures, yes, it has more cash from operating activity. Ambika Cotton seems to be a better company seeing its operating activity. But when such two companies come in front of you, I would say also check the return on investment of these companies. What is return on investment? I will talk about. That is how much, say it is earning 45, but how much is the capital employed to earn 45? Similarly, it is Ambika is earning 300, but how much is the capital employed for that? Seeing the return on investment, you can go in and select the share out of these two companies. But if I see like this and I consider Aptus to be a smaller company, so Aptus is buying more assets according to its size. Ambika Cotton is buying lesser assets. So maybe Aptus is thinking of growth. Financing is negative for both are repaying its loan. All that is positive for us. So out of Ambika and Aptus, just seeing these figures, I would also say Ambika. So third number should be Aptus, second number should be Ambika. That leaves us with TCS, which is on number 1. If you see, TCS is great cash from operating activity, positive. If you see, TCS still has a great amount of negative cash from investing activity, which means it is still thinking of investment. It is still thinking of growth. And out of the money earned, it is also repaying its loan, which if you, I had taken the debt equity ratio for TCS as well, which if you see is really low. Why? Because the company is repaying its loans. So TCS definitely is number 1. Now I am waiting. If you have any query, please write it down so that I can clear it. Return on investment, I will tell you the formula for it. All right. Return on investment. The formula for the same is profit before interest and tax. Profit before interest and tax divided by capital employed. So when I say profit before interest and tax, so that profit will include interest, will include taxes. And we had already done the formula of capital employed, which was shareholders' funds plus long-term debt. So that tells us how much is the capital employed, and out of that capital employed, what are my returns? Greater the returns, better the company is. In case we are confused seeing the figures the way we were seeing Ambika and Aptus. I hope the formula that I have spoken was fine. Otherwise, I can speak it out again. It is profit before interest and tax divided by capital employed. Greater the ratio, better it is for the company. We would go in for investment in that company because the returns are more for this company. Any problem in the analysis? If not, please let me know. Then I'll go ahead and I'll give you some random figures of other companies so that you can analyze on your own without my help. I am just here to tell you yes or no. Just give me a minute. I'll have to open the other PPT. Here, please see. I would request just make this change for the third company. This company, it is a negative cash from investing activity, minus. Would request you to please copy these figures because I have one more slide to make it 5 companies. Once you've copied it down, let me know. I will move on to the second slide. Okay, if copied, this is the second slide. These are 2 other companies. Let's name the companies as A, B, C, D, E. So do tell me which company would you give number 5? Try and answer, all of you, please. Company B as number 5. Okay. That is, you're talking about this out of A, B, C, D, E. This company is what you're talking about. Any other answers? Okay. Swastik ji, this is A, the first one. This one's B. This one's C. This one's D. And this one's E. Okay. I've got the answers from people. People are saying, many of you are saying that company B is number 5. Number 1, company B is having a negative cash from operating activity. So definitely it is a matter of concern. But if you see company E is also having negative cash from operating activity. This one here, minus 1071. So out of these, why are you saying then B is bad and not E? I think the analysis then goes to investing activity. If you check, company B has a positive investing activity, which tells us that the company is selling off its assets. If the company is selling off its assets, next year again it will have a negative operating activity. Why? Because next year again its money generated would be less. So this analysis is correct. B, then E. Okay. Number 3 would be what? So number 5 is B. Number 4 is E. Number 3 would be what? A, C, or D? Please remember, in C, I had told you have to make this change. Cash from investing activity is negative. So out of D or C, which one would you say is number 3? Out of this or this? Please remember, this is also negative. I'm glad most of you have got it. D would be considered as number 3. Why? If you check operating activity, for both operating activity is positive. For both investing activity is negative. But if you check financing activity, it is positive for D. That means D is taking more of loan, it is expanding, it is issuing more of shares. So your concentration of the amount of shares that you have will also decrease. Whereas C here, just give me a minute. Yeah, if you check, C has a negative cash from financing activity, negative investing activity. It is repaying its loan, and from this money, it is also investing in assets. So it is definitely thinking of growth. That leaves us with company A, which is the best, and that we should go in for investing in this, but provided the value of shares is good. Any questions that you have, please do let me know. Otherwise, I'm closing this PPT and I will discuss the first one that we were doing. These are rough figures that I picked up from somewhere for your analysis. Okay, I come back to our previous PPT. This analysis is clear. The next one was also clear. Now we have done the formula for return on investment. I hope that formula is clear. Also, if you could let me know, have the PPTs been posted in your group? Great. Thank you, Vaishali ji. Here, the last thing that we should know in our fundamentals. Yesterday, I don't know how, but this topic did come up. What is stock split? So please remember, in stock split, the amount of share capital does not increase. The amount of share capital remains the same. So if the value of the share was 100 rupees and you want that the value of the share now should be 10 rupees, when I'm saying value of the share, I'm talking about the original price of the share or nominal price of the share or face value of the share. So what will I do? A person having one share of rupees 100, that one, instead of that one share, now he will be holding 10 shares. That is stock split. That one share value was also 100. The 10 shares value is also 100. So only the number of shares is changing. The total amount does not change. So the amount of shares that I have, that remains the same. So neither is there a gain nor a loss as a shareholder. So if a company's original price of the share was 20 rupees, they want to make the original price of the share as 10 rupees, they will issue 2 shares for every 1 share held by them. So the total value, face value, original price of the share remains the same. What is changing? The number of shares held by them. Why do they do it? They just do it so that, Anuji, sometimes the value of the share in stock market, it appreciates so much that as investors, we don't want to spend so much money on one share or 10 shares only. So they decrease the value of the share. Consequently, value of each share in the stock market also falls, which gives them a better, which gives the other smaller investors better chance to acquire these shares. So the demand of the shares of these companies would go up. And we all know, as demand goes up, the value, the market price of the share will also increase. Anuji, I hope I've made myself clear as to why do they do stock split. Stock split is nothing to be analyzed as positive or negative. It is the decision of the directors of the company, because the original price of the shares is not changing. That does not affect us. Yes, the shares become more accessible for us. So as investors, it is good for us. Uh, Face value itself is the stock price. Yeah, the face value of the share is changing in this case, Parshuramji. So in say before a stock split, the face value of the share was 100 and they want to make the face value as 10. So they are decreasing the face value. And if the face value is decreased, consequently, the market price of the share is also decreased. So the only thing that we should know is, during stock split, the total price of the share, the total value of all the shares that we have issued does not change. Only the number of shares change. Yes. Any other questions that you have based on our discussions, please do let me know. And I think we have covered all the topics in fundamental analysis that we had to do. So if you have any questions, please put them up. Otherwise, from my side, I have tried and cleared your fundamental analysis, whatever is required for your investments in future. For that, I'll have to get the figures of Adani. But the thing is, Adani's figures right now, we cannot access them. But what I was reading the other day, it is although Adani's figures have come into limelight, but whatever debt it has taken, it has a huge debt equity ratio. I don't know how the banks have agreed to give him such loans. The debt equity ratio, I think, is ranging up to 10:1, which is really, really high. But what I was reading also is that all his loans are backed by assets, which is a good for the company, which I think, because of their investments, they have invested very wisely, they should bounce back. They are more better, Vanashri ji, for long, in, even if I don't say long term holding, but holding for some amount of time. So these, because buying in the morning, selling in the evening can be, these analysis might not help you, but if you plan to hold it for some time, this analysis will give you better returns if you buy the shares according to these analysis. This is for Adani, Anuji. So if you see operating activity is there, good enough, it is buying more assets, so that means it is thinking of expansion. But as we can see from its debt equity ratio, all this expansion is from its debt. Where is the problem in Adani? That is the problem in Adani, that it has a huge debt equity ratio, and therefore the analysts want to know whether it will be able to repay its debt without diluting its assets. Because we can see that the entire debt has been taken to buy its assets, and that is why the debt is secured against these assets. So a time will come, if Adani is not doing well, it might be difficult for him to pay off the interest and repay the loan out of its operating activity. Right now the operating activity is too less to repay the loans. Yeah, that is because they have taken huge amount of loans and they have put their assets there. Swastik ji. But the only positive that we can take from this company is whatever investments they have made, they don't plan to close down their operations. Unlike other people who've run away from our country, they don't plan to do that because of their investments that they are making. So they do plan to continue business, and also maybe they are hoping that they will revive. But right now, if you want to invest in it, please, it should require your guts. It is risky for now. Let it come to the revival mode, then you can think of investing. PE ratio, I told you we have to see with its other peers. But a high PE ratio would mean that maybe the investors are expecting high growth rates. But these PE ratios must be before these figures have come out for Adani. I know that the value of shares of Adani is falling, but right now keep a watch on it. If you think the revival mode is good, you hear positive about it, then you can think of investing, because I also feel that Adani has made wise investments. But right now we can't say because its debt is huge. So let us wait for some time before you take that much of risk. So this is it for our fundamental analysis class. All the best to all of you. May you invest wisely and earn more. Thank you. Anjanji, this is what you need to know about fundamental analysis. Yes, Vanashri ji, my entire syllabus that was assigned to me, I feel it's over. I don't think so, Anjanji. We are meeting tomorrow. In case you need any help from my end, please feel free to contact the Stock Pro team and I will be there. No, I think we began on Friday and we've had our 5 sessions. What's so surprising, Vanashri ji? We have done that earning before interest tax. Anuji, we just did return on investment. Earning or profit is the same thing. Thank you. Good night. All the best. Vanashri ji, buyback of shares is when as a company I buy my equity shares back, which according to the laws now is very difficult. You need a special resolution for it. So Reliance Industries is buying back its Reliance Industries shares, which is not possible. If it is done, special resolution is passed, it will come under financing activity. Anuji, I think now you know how to read some financials. Anjanji, I don't think so. FII and DII was there under my schedule. It has already been posted, wherein I've written the details, what comes under what. Purchase of asset, sale of asset. Right, everyone. So I'll take your leave. Good night.